Good evening, everybody. Thank you very much for joining in. This is Rahul Magan here on behalf of Treasury Consulting LLP, and today we are going to speak about a very important topic which is very much prevalent nowadays, which is Companies Act 2013, 14312, Internal Financial Control. As we understand, whenever we wake up early morning, we are getting a news that this company did this fraud, this company did fraud, SEBI is looking for empanelment of the firms, CBI is looking for the empanelment of firms. Every second day there are such news in the market. That is only because there is no internal controls in the company. People just wanted to do what they wanted to do. Nowhere you can caught them, and so on forth. Now, Companies Act 2014, 2013 made it mandatory for all public, listed and non-listed companies to have an internal financial control in place. Now, this is effective 1st April 2014, and today is approximately 2 years, but the unfortunate part of the game is that it has not yet implemented in many of the companies across India. In fact, during several training sessions, people are asking us that why we never heard about 14312. That is very much unfortunate part of the game. And now as we move forward in this presentation, we'll introduce you towards very new terms, and I assure you that you yourself will feel that the things are something which majority of the people are not aware of. So let us start that Companies Act 2013 in section 143. What is 14312? This is a very short term. Now 14312 means section 143 para 12. That is why this is shortly known as 14312. As per Companies Act 2013, section 143 and para 12, they are saying that they are giving a power to the auditors to give in writing to the audit committee, management, if required, then to the Ministry of Company Affairs, that there is a fraud or an offense covering a fraud that has happened in the company. Now, how this happened? Now 14312 is saying there is one thing which is internal financial control. But internal financial control is all about the controls which the corporate should take. Now this applies to both listed and unlisted company, although there are few criteria of the internal financial control which we are not discussing, that what is the criteria, how it is applicable on the public listed company and the private listed company. That all we are discussing in the next video, when we are going to discuss ICFR or ICOFR, internal control over financial reporting. But nonetheless, internal financial control is divided into two parts. One is internal financial control with ITGC and ITGCF. One is internal financial control without ITGC and ITGCF. Now, what ITGC stands for? ITGC stands for Information Technology General Control. ITGCF stands for Information Technology General Control Framework. Now, IFC with, let me categorize this. I will simply session to A and B. Now A would further divide it into two parts. One is IFC and ITGC and ITGCF, Information Technology General Control and Information Technology General Control Framework. Now IFC is nothing but these four: process note, risk control matrix, standard operating procedures, and segregation of duties. We shortly refer this as do here. And ITGC and ITGCF divided into four parts, which is your information security, which is ISO 27000 series, which is ISO 27000, ISO 27001, ISO 27002, and etc. Then you have COVID 5. COVID stands for Control Objective of Information Technology. You have SSA 16, you have GMLA and NIST. These four are information technology frameworks. Let me write here. These four are information technology frameworks. Now let me re-summarize before moving forward. Companies Act 2013, 14312 has made it mandatory for all companies to have internal financial control in place. Internal financial control is basically divided into two parts. One is internal financial control with ITGC and ITGCF. Second is without ITGC and ITGCF. Now in this, it further divided into two parts: IFC, ITGC and ITGCF. In this ITGC you have four parts. ITGC stands for Information Technology General Control. ITGCF stands for Information Technology General Control Framework. Now this is further from perspective of information security, which is ISO 27000, 27001 and 27002. We have COVID 5, SSA 16, GMLA and NIST. In internal financial control, you would have four terms: process node, risk control matrix, standard operating procedures, and segregation of duties. In the case of an American company, take an example: Cognizant, Google, Microsoft, Genpact, Accenture, Capgemini, Sapient, and others. We need the certification of SOX and COSO. Now, this certification is nothing but this is to be given by the statutory auditor. SOX stands for Surveillance Auxiliary Act, and in SOX you need a certification of SOX 404, and you also need a certification of COSO. Now, what is SOX and COSO? SOX is nothing but enterprise risk management tool, which covers all financial reporting, your internal control over financial reporting, your so-called profit and loss, your balance sheet, your P&L, your cash flow, and segment reporting. Plus, suppose we take an example of a company called Capgemini, and Capgemini would have multiple departments: treasury, tax, revenue, foreign exchange, and etc. All department would have a separate process node, risk control matrix, standard operating procedures, and segregation of duties. Once these all would be made, these are to be approved by SOX and COSO, which will need a final approval from statutory auditor and of course subsequently audit committee, and then it's going to get applicable. Please note carefully the difference between SOX and COSO is rationality. So if you are writing an email in SOX, especially in the internal financial control, where you are not speaking about rationality, then there is no point. But when you are writing in the COSO, you have to give in the rationality. This sometimes is also known as SOC hierarchy. Some people will also refer this as a COSO hierarchy. That is, so our company, which is Treasury Consulting LLP, is all ready to bid for request for proposals, which is scheduled in September or October 2016. We are ready to assist you when it comes to internal financial control, wherein we will do the process node, risk control matrix, standard operating procedures, and segregation of duties. We are going to be ready covering both the models. We would be covering using BOT, build, operate, and transfer. We are going to be do build, own, operate, and transfer, or we may do in the form of the consulting project. The choice is yours. We are ready to create process node, risk control matrix, standard operating procedures, and segregation of duties for you. We will make sure that your particular company, if you are an American listed companies, you are SOX 404 compliant. We will assist you in having COSO compliant. We will assist you in having information technology control, example COVID 5, SSA 16. SSA sometimes also stands for SOC reporting. SSA sometimes stands for SOC reporting. Now, which is further divided into SOC 1, SOC 2, and SOC 3. SOC 3 will sometimes also referred as an assurance letter. GMLA and NIST. This was all a little introduction about Companies Act 2013. Before winding up, would like to highlight few points. Number one, Companies Act 2013 14312 is mandatory for all companies. Secondly, this will help you in mitigating the frauds. Third, if you have that certification, then it is good. If you don't have the certification, then your company may drag to Corporate Affairs, Ministry of Corporate Affairs, wherein the auditors, cost accountant, company secretaries have a right to directly write to either audit committee or to the auditors or to the Ministry of Corporate Affairs if he feels that any fraud or offense of a fraud is happening. There is information technology framework is very, very important in the sense like you have all kind of IT assets. You have your own desktop, laptop, software, mobile phones, and variety. COVID 5.1, COVID 5 suits you. SSA 16, which is also known as SOC reporting. SOC stands for System Organizational Control. This is also very useful in the sense like SOC 1 is your own asset. SOC 2 is a vendor asset, outsource asset. SOC 3 is an assurance letter. Then we will help you in GMLA and NIST, which is also IT frameworks. So Treasury Consulting LLP is all ready for that. We are coming up with our website roughly by mid of August. In this, we are going to demonstrate this. You are always welcome to contact us at treasuryconsultingllp@gmail.com, or you're welcome to contact us at rahulmagan8@gmail.com. Our contact number is very well known to you people, 9899242978. Before winding up this video, I would like to suggest to all proprietors, CEO, CFO that fraud is very prevalent. You should be very careful. If you thinking that this is something an additional cost to the company, this is not the case. This is not a cost. This is for your benefit. Assume you have 10 departments: tax, treasury, revenue, consolidation, US GAAP, your invoice punching, your banking team, and etc. And none of them have a document process note, documented risk control matrix, document SOP, and document SOD. None of that have that. Then it's going to be a biggest issue for you people, because if the fraud would happen, you cannot go to any litigation and you cannot prove that how fraud was happened, because nothing is documented here. So we would request you, do not consider cost. Please consider the advantage which Companies Act is giving to you. And like we have SOX and COSO internationally applied, I hope Companies Act 2013 IFC would help you in that regards. With this, would like to thank you very much. And as you know that you're most welcome to subscribe our magazine, which is the Maverick Treasurer, which is a monthly magazine costing not more than $1 per month. You just write us an email on these two numbers, or if you want any clarification, give us a call. Thank you and have a good luck.